Hello, welcome to the weekly chart review. It's Monday, March 20th. I'm Selena Nicholas, technical analyst at XM.com. We'll look at various currency pairs. We'll start first with the dollar index on the daily chart. So we can see that the US dollar index fell sharply last week below the 50-day moving average. It also fell below the key 101 level. It's now challenging a critical area, the 100 level. This is also where the 38.2 Fibonacci retracement lies right now. It's the up leg from the August low around 94 all the way up to 103.81. And that was hit on January 3rd. So a daily close below 100 would start to see more downside movement, and we could target the next Fibonacci, the 50% level. This is around 98.90, and then below this we could say that the bias would shift to more bearish one. If we look at the technical indicators, they are giving bearish signals. We have RSI below 50, so it's in bearish territory. And we can look at the MACD, the histogram, it's below 0, so that's also a bearish signal. And of course the market, it's below the 50-day moving average. So short-term bias is now bearish for the dollar index. Now let's take a look at the USDJPY Dollar Yen. It was in a neutral phase for quite some time now, since mid-January. Prices were basically in a range from 111.50 and capped around the 115 yen level. The immediate bias now, it's clearly to the downside, especially after falling below the 50-day moving average, although we expect strong support at 111.50, which is the lower end of the range. The bearish bias will be negated once prices can reclaim the 113.60 area, or at least rise above the 50-day moving average. Looking at the stochastic, it's basically oversold, and the RSI has steadied right now. It's not falling anymore further into bearish territory, so perhaps we could see a rebound in prices. Let's take a look now at the EURUSD on the daily chart as well. EURUSD, its bias remains to the upside in the short term, with scope to target resistance around 1.08. That's a key resistance level, and also the high of 1.0828 that was hit in January. So these are key barriers to the upside. If we look at the RSI, it's trending up, so it's pointing to a bullish short-term bias as well. And the MACD histogram, it's above 0, and that's also adding to the bullish bias. But let's take a look at support levels should prices fall back down. Of course, 1.07 comes into view as immediate support. If prices fall below 50-day, support would turn more bearish, turn more back to the downside to target 1.06 before heading towards 1.05, which was tested a few times recently. Now, finally, let's look at the Aussie dollar, Australian dollar against US dollar. We could say in the last month or so, it had a neutral bias, but could shift to a bullish phase once prices break above 0.7740, close above this, and rise back above a key level of 0.7777. Prior to leveling off, prices were rising from a low of 0.7159, So we had that bullish market structure before consolidation, but if we look at the moving averages, there was a bullish cross here when the 50-day moving average, which is the orange line, it crossed above the 200-day moving average, which was the purple line. So basically this happened early March. This gave a bullish signal, so it's supporting a bias that is heading to bullish, to indicate that this is a likely scenario. We have RSI also above 50, so that could that is supporting the bullish bias, and this upside bias would be shifted to the downside if prices drop below 0.7650 and below key support at 0.76. Otherwise, we expect the bullish bias to remain. Thank you so much for watching. Have a great day.